7, 6, 5, 4, 3, 2, 1.
Hi everyone, welcome to
hello.
our home buyer seminar. I am Vinnie, and who we got over there?
I'm David.
Perfect. All right, let's get at it.
It's these first time home buyer seminars, I've been noticing, Vinnie, we're getting a lot more traffic, a lot more questions, and that's probably because people are finally realizing that during this time, even though it is not the best for a lot of people, it does present a lot of good opportunities for you.
Yeah, it's definitely an interesting market. Rates are really good. There's a lot of positives going on. It's funny, people that I've talked to that don't have a full understanding of the market currently, they go, oh man, there's going to be great deals to be had. There's going to be this, and this, and not really understanding the full extent of this market. We've seen for over the last month, which we've kind of talked to about on our market updates, a kind of more people holding off. Yet more recently, over the last week or two, like last 2 weeks, we've seen more people getting more accustomed, get more relaxed about this market and putting their property in the market. So there is more inventory out there.
Yep. Well, let's go through this kind of fast today. We know you guys are busy on a Saturday, so all these slides are available for you. If you just ask for them, we'll send them to you. Otherwise, we're going to move at kind of a faster pace. So, sit down, buckle in. This could be a NASCAR experience, and if we go too fast, let us know.
Sounds good. Let's go for it.
All right. So where to start with home ownership plans? Well, first of all, you need to look at your job, your stability. You need to look at your job with its current future growth, opportunity for pay increases. Then you got to look at where do you spend your money? Are you saving your money currently? Do you contribute to a 401k? Do you have an emergency fund? And what other goals do you have? Vacations? Do you have to buy a car? Do you have to plan for your kids' education? You want to think about all these things. And then the two other things that usually pop into everyone's head right away is, what can you afford monthly? What's your ideal? And what do you have for your down payment for the house? Or do you need assistance?
Now, two big differences. I say this on every seminar we have: what you can afford and what you can comfortably pay on a monthly payment. Those are two different things. You can possibly afford more money, more of a property. Yet, if you're currently paying rent at one price, and now you're talking about a difference of $1,000, $800, or whatever that number is, see how it feels on your pocketbook before you dive deeper into that monthly payment. Is a big suggestion.
Good one. Well, how to finance your home and picking a lender? Well, first of all, a lot of you are going to go out there and ask your friend or family member, which is a great way to start. Once you get that, you also want to talk to a realtor, which we'll go over that later as well. But then some key things that you really want to do is you want to Google that person. You want to see, do they have Yelp reviews? Do they have Zillow? Do they have Google? Do they have Redfin? Read the reviews on the loan officer. Check out their license number. Make sure they do it full time. Make sure they have experience. You don't want to gamble the biggest investment in your life with someone doing your finances that's rookie and doesn't know what they're doing.
Yeah, dive deeper. It's surprising how many more people will actually do more research on the phone they're going to purchase than the realtor or the lender they're going to use. Dive deeper, know who you're working with, just so you have peace of mind. Especially too, if let's say you're starting the process and not really sure if you can qualify, because the guidelines are tightening up a little bit, but you'll see from one lender to the next how things change, how things vary. The real estate market, if you talk to one realtor, then maybe the last deal was 3 months ago. 3 months ago to today is a totally different market. So make sure that they're actively working, they're actively aware of how the market's changing. I know we talked about on our daily or weekly updates, you were kind of bringing up the idea of FICOs, of how I think it was like coming down again, right, to 620?
Yeah, came down to 640. I mean, had you asked me that 4 weeks ago, everyone required a 680. Now we're at 640, so things are turning.
Yeah, so, all right. You want to take the next one?
Sure. Now that you have a lender, what's your next steps? Well, these are the things about getting pre-approved, and getting pre-approved means the lender is going to look at everything comes in twos, not 2 pieces of pie, not 2 pieces of pizza, not 2 beers, but 2 current pay stubs, 2 years tax returns, 2 years W-2s, 2 months bank statements. We're going to look at all that, and we're going to pull your credit because we want to examine all options to make sure that we explore everything for you to make sure that you get the best loan for your situation. Or if you needed a home buyer assistance, down payment assistance, we need all of that to explore as well. We're going to review everything. It's all about the details. So when the lender asks for those things, they are important and we do need them.
And if, let's say you're not W-2, you run your own business, talk to David and he kind of walk you through what loan programs are available. I use this analogy all the time. And if you've seen some of our previous seminars, David is like the attorney, the underwriter is like the judge, and David's trying to build a case of why you deserve to be able to purchase the property. Okay, so the more information that he has about your situation, it will allow him the opportunity to sell why you should be able to purchase this property and why you should get the best rate possible. Okay, so the more information, the better.
Absolutely. That is a great way to put it, Vinny. Your lenders reviewed everything. We're going to share your goals with your realtor. You got to look at these and questions you need to ask yourself. What's most important to you? Is it the monthly payment? Is it the location of the home? Is it the appreciation of the home? Future rental value? Look at the loan. What's most important about that? Is it down payment, interest rate? Lowest cost to close on the home? Lowest long-term borrowing cost? You need to know what's most important to you and be able to ask great questions, because great questions give you great answers.
Yes. If you feel that it is a dumb question, feel free to ask it anyway, because there's some stuff that we do take advantage of and we're not aware of it. It's surprising how many times where someone will ask me and be like, oh, well, what about this right here? And I'm like, oh my gosh, did I not tell you about that? Because it's like something we do on a daily basis, so we forget. This might be the first purchase you're doing. This might be the last purchase you did was 10 years ago, 12 years ago. So you're not up to date to new terminology, the new way of things are progressing. Even if you bought a house maybe a year and a half ago, it's a totally different way of how things are going now to a year and a half ago. So feel free to ask any kind of question that you might have. And if you're watching right now, feel free to comment in the on the post, and we would love to answer any of your questions that you guys might have.
That's our wake-up screen. Did you do your pre-qualification correctly? The reason why the lender is doing this is all of you have heard these stories. Vinny, I know you've heard them. And actually, I got a phone call from an agent yesterday that had this blow up in their face. If you don't do the pre-qualification correctly, this is what happens. The loan goes bad. We want more items as a lender. The process takes forever. We're always going to come back and ask you for more items. You may need more money for down payment. You may need a cosigner. Loan costs go up. You need to pay off this debt. All these things can be solved day one if you do the pre-qualification correctly. And if you look at it and your lender starts blaming everybody else, it's actually the lender's fault. The lender's responsibility is to do their job correctly and cover everything day one. So please take that into account, that the pre-qualification is super important, and please supply all the items. Ooh, this is an interesting one, Vinny, because right now, more than ever, basically loans have been totally turned upside down on their head. So where it says 580, that's when me and you started doing this. That's what we were doing. And now we're at a 640. So look at the difference. And it's 640s now across the board. Still, the different loans you can get, FHA, conventional, VA loans, jumbo, everything is different now, and the market's constantly changing and evolving. So you really want to touch base with your lender and make sure that they're up to date with the latest guidelines as well.
And if you bought a house using your VA loan a year ago, the rules have changed. I know we've said it on a lot of different posts, but if it's your first time watching, the VA limit has gone away. It's based off of your debt to income ratio. So if you're looking to purchase or you're thinking that you had to purchase with the jumbo loan and actually also the difference with your VA loan, that has gone away as long as you can qualify. So reach out to, again, myself or David.
Uh-oh, technical difficulties.
There we go. We got it through though.
There, boom. Vinny, this is all you, my friend. Tell us a little bit about appreciation and prices.
All right. So, I mean, I'm always hesitant to say, you know, this is what happened over the last 5 years. So projecting that this is what's going to happen over the next 5 years. Okay. I think that's a very difficult way of selling what's going to happen in the future, because there are ebbs and flows of the market. The market goes up, the market goes down. Now, if we put this over the last 20 years, and you've seen the differences happen over the last 20 years, yes, if the market goes down after this is, you get an influx of new properties, all that kind of stuff, the market's going to go back up. It's just a matter of when, right? That's what's been going, unless you think the market is going to drop altogether, which I don't think that's going to be the case. But so if you bought 5 years ago, you can see the gains you're talking about in the 92105 and that market. You mean there are communities that are a little bit higher price point than other communities, yet as a whole, it's gone up close to about $200,000. Okay, $200,000 over the last 5 years. Now, if you're purchasing today, again, don't factor that in. Say that, hey, I want to buy today because I want to basically make $200,000 property. We can talk about your specific goals with your purchase and try to minimize the risk as much as possible. Yet the market is constantly changing, so be up to date with the information you're getting.
Ooh, average closing costs. Well, we'll go through this slide really quick because we know you guys are busy. We gave you a simple formula. Average closing costs of our home, 2.25% of the purchase price. That's the simplest, safest number. It's very conservative. And your closing costs can be negotiated by your realtor. Lender can also credit you money towards closing costs, but the closing costs are totally different than the down payment. So when you look at this and you go, holy mackerel, I saved for my down payment, but what are closing costs? If, for example, you're buying a home at $500,000, do the math, 500,000 times 2.25%. There's your closing cost. It's a great safe estimate. There's always going to be closing costs unless, you know, Vinnie can negotiate all of them paid for you. You know, you never know what can happen. Deals happen. Or you can also have the lender credit you money towards closing costs, but that means you get a higher interest rate.
Yeah. So how we want to structure the offer, if you need closing costs, we can sit down and structure an offer so we get some from the seller. So understand how much money you have to put down, what you feel comfortable on your monthly payment. That will kind of allow us the opportunity to put the best offer forward to hopefully get your offer accepted and also make it appealing to the seller and to yourself when you purchase.
You want to hit this, Vinnie?
Yeah. So very important to think about what you want when you're buying a property. So how long do you plan to live in the property? Now, the National Association of Realtors says that the average person is buying and selling every 5 to 7 years. So if you're looking to, if this is not your forever home and this is your first purchase, it might not be your forever home. It could be basically a stepping stone. It could be an investment property. If you are thinking about, okay, I want to sell in 5 years, look at that monthly payment. If you can comfortably afford that monthly payment or even rent it out close to that monthly payment right there, then even if the market goes up or down, you're still going to be taken care of. The value of the property only matters when you're refinancing it or when you're selling it. It doesn't matter if the property's underwater, if the market goes down. It just matters on that monthly payment. Where you buy is important. Now, understand what you want to do on a daily basis. Some people want that quote unquote walkability. Other ones want that really near their work. Other wants it near family members. So dive deeper into what you're looking for in your property. Does buying a home still allow you the life and sleep to sleep comfortably? Now, this is something we talked about earlier on. There's a difference what you can afford, okay, and what you qualify for. All right. Now, yes, I've heard this before where, okay, well, I'm currently paying this much for rent, and for another $300 or $400, I can have a monthly payment, right, for this. Oh, well, that's fine. I mean, for $400, I can just cut out eating out or go to Starbucks or whatever it might be. It's easy to say you're going to do this or do that, yet see how it feels in your pocketbook. Maybe make the difference of that $300, $400 for a month, 2 months before you actually purchase, and put that in a savings account, just so you can kind of get a better understanding of where that monthly payment's really going to affect you. And then also to plan for the future. I mean, it's very difficult to say, okay, I want my debt to income, I'm going to use the VA loan, and I want to push my debt to income to like 55%. And
Wow.
now I don't have enough money to push for my retirement. Really put a strong enough game plan. If you need a financial advisor to talk to you also about your future, feel free to reach out. We both network and talk to trusted individuals. So if you need help on that, feel free to reach out.
It's now more than ever with this unexpected pandemic. What Vinnie just mentioned couldn't be more important. Is nobody expected this to happen. Nobody expected things to close, and nobody expected pay cuts. So that's why what Vinnie just went over is so important.
All right, choosing the best realtor.
Ooh, it's super important.
This is the same kind of idea of what we looked at with the lender. Diving deeper, online reviews, just like similar Yelp and Google, a lot of those kind of things. Check the license number. The higher the number means new to business. All right, the lower the number, they've been in the business for an extended period of time. Did they do it full time? Did they do it part time? Do they own? Do they not own? How many homes do they really sell? Experience matters. This is one of the largest investments in your life. So make sure you make an educated decision. Okay, there are some great realtors in San Diego. I think one of the numbers to really take away, that 20%, okay, roughly around 20% of the realtors in San Diego County do 80% of the business. So
Yep.
make sure you're working with a realtor that actually is doing business on a high volume and understands what's going on a daily basis.
And you know, Vinnie, it's 80% of realtors close 3.77 transactions. So if you think about it this way, if you injured your head and you needed brain surgery, would you work with the guy that does 3.77 surgeries a year? Or would you go to the surgeon that goes, hey, I do this full time. I do it 15, 20, 30 times a year. I got you covered. You're going to go where the experience matters. So please be careful about all the social media accounts with agents posting that they close all this business, because the reality of it is they don't. And 20% of realtors do the lion's share of the business. You want to work with someone smart. You want to work with a professional. Please don't choose your realtor just because you go, hey, I really like them. So what if they sell 2 homes a year? They're great. That's a big investment. So choose wisely, please.
Yeah. I mean, it's the value. I mean, what people are asking for a property is not necessarily what they're going to get the property. Sometimes they price it lower. Sometimes they price it higher. So you're able to save money. Sometimes you're wasting your time on a property because they priced it really low because they're trying to drive traffic to that property. So understanding what they're trying to get out of that pricing is going to help you out going forward in your home buying experience. So if you talk to, the right realtor, they can kind of walk you through the process and give you a better understanding of the current market.
You know what, Vinnie? You just mentioned something to me. If I was a realtor, I would call myself the right realtor. Because I could use my last name with that. That was, unfortunately, I'm the right lender. I just thought about this.
That is fantastic. See, you learn something new every day.
Every day. Thanks for expanding my boundaries, my friend. Now that you have your loan set, you got a great realtor. Well, now you get to actually do the fun stuff. You need to think carefully about what house size, the location, schools, appreciation, price. Making offers. The realtor is the most important part about making the offers. I'm sorry, I'm going to say something here, Vinnie, and it may be shocking to you. I don't want to shock the world, but making lowball offers in an area where there's ultra high demand, is that a good idea?
I mean, we all have the same amount of hours in the day. So based off of the property, based off the situation, if you have the time to spend and have the time to waste, put as many lowball offers as you want out there. They do get accepted every once in a while. It's just a matter of the property. Again, it's really based off of the property. It's based off of the situation. It's based off of how they market the property, and having those relationships with the other realtors that you can kind of talk and dive deeper into it. Hey, you know what? The price is where we put it. Yet they're willing to take a little bit under what they're currently asking for. And So it's really understanding the property, understanding the motivation, understanding the situation. Yeah. So think carefully about what do you want with this purchase, the house size. All right. Would you rather get one property that has kind of better location, yet smaller, or something that's a little farther away that has more land? Schools, a great platform to look at for schools is greatschools.org. It's a good avenue to kind of give you the rankings of the schools in the different area. Appreciation. Now, no one has a crystal ball. Some people try to portray that they do have a crystal ball of what's going to happen over the next week, month, year. All we can give you is the numbers, okay? And we can give you a better understanding of what's going on in each community, how there's been a transition of quote unquote gentrification happening in maybe one community, or how the values have kind of transitioned up in another community, or the values have actually started transitioning down in another community. So we can give you an idea of what's happened over the last months, years, even weeks. Yet no one has a crystal ball, and we can help you, though, at least give you a good understanding of what's going on. The last thing is price. Understanding that price. The rate fluctuates. Now, you don't lock in the rate until you actually get it to escrow. Okay. I guess you can if you want to overpay it, right?
You can totally lock in. So a lot of people will come and ask me and go, "Oh, can I lock the rate before I'm under a contract?" Unfortunately, yes, we can. You're not going to get good pricing. You're not going to get the rate of the current market, and it's going to be like 90 to 120 days in the future, and it's not as good. So in order to lock your interest rate, the best, smartest plan of action is to have a property under contract. And Vinnie, I know you mentioned a really big word, and for some of us who are slower, that gentrification, could you tell us what that means? Because some of us just don't understand the word.
I mean, it has a negative connotation in some areas, and then a positive, I guess, in others. So it's just the idea that houses that are maybe falling down, investors are purchasing them, renovating the properties, putting back on the market at a higher price. And so you'll see over time in these communities, the pricing slowly go up. It does push out renters and people that have lived there probably a longer period of time, because now the rents are also going up. So it can be perceived as negative when you have gentrification happening in a community. One thing that to really look at, something that I even talk to my buyers about, is if you're looking in a community that the houses seem all right compared to a community where maybe a couple of houses seem really bad, sometimes it might be better to sway to that area where the houses are really bad, because sooner than not, you're going to start seeing those houses get renovated and brought to their previous glory. So something to kind of think about when you're purchasing out there. Oh, and then price. So like we talked about, your rate fluctuates. So talking with a great lender like David will help you get the best monthly payment as possible, because price is just more focusing on the monthly payment unless you're buying with all cash. So when you're in escrow, the rates are going to fluctuate on a daily basis. So he might tell you, hey, you know what, today's not the best day to lock it in. Let's actually wait for a week from now. Let's wait for a couple of days from now, because I think the rates are going to get better. So David can kind of help you out with that as you are in escrow.
You got to follow the economic events, because that's what moves the market every day.
So so the offer, now purchase price is perceived as the biggest thing in an offer. Now that's not necessarily the case. Purchase price is just one of the factors that plays out when you're presenting an offer. Terms of the offer, time limits. Some people would rather take a shorter escrow, where that's why investors get such a positive, positive experience compared, or get better pricing compared to a conventional buyer. Yes, the condition of the property does play a factor, and terms of investor offer compared to a conventional offer in the end becomes cash. All right. So time frame can be key. Some people will say, you know what, I'd rather close on this property in 7 days instead of waiting another, 23 days, a 30-day escrow to get my money. So terms can play a big factor. Splitting of the fees, escrow and title can be split up in the contract. Items to be conveyed. You have real property and you have personal property. So real property conveys with the property. personal property usually is taken with the homeowner, and how much the EMD is. EMD, generically 1% can go, I mean, sometimes it goes to 3. Again, David likes to overestimate just so you're fully protected. And in this slide, we have up to 5, which 5 would be
very aggressive.
Fairly aggressive. You know, if you're putting a 5 as an earnest money deposit, it can look very appealing to maybe the seller because they want that comfort level of they're taking the property off the market and you're putting up a substantial EMD into escrow.
Ooh, what happens next with your offer? Well, after you work with a great agent, you make a good offer, it either gets accepted or rejected or countered. And the countered is a great way to really look at the value of a very smart, successful agent to negotiate and help you get your offer either accepted or negotiate to the terms that are better for you. So it's something you're going to expect. I don't think all the time, Vinny. How often does it happen that you write an offer, it goes over and gets accepted and comes back the first time? Is that common?
I mean, there's usually going to be something that the other side wants. It's really based off of their situation. Maybe they're not getting a lot of traffic on the property. They want to accept it outright. Maybe it was a fairly clean offer that everything was agreed upon in the initial one. But there's usually small things that want to be countered out. So I'd say, I mean, majority of the time, you're probably going to get some sort of counter. You do have the possibility of getting a multiple counter. The multiple counter means multiple offers were received and they're countering out multiple people. So if you get a multiple offer, the contract doesn't become binded. Once you accept their terms, you still have to accept their terms or counter them back, give it back to them before they kind of accept your new terms. So there's a little bit of a time lag when you get a multiple counter compared to a traditional singular counter.
We're doing pretty good on time today, Vinny.
And what are we at right now?
26.
And I think we're dropping some good knowledge too.
You're dropping some nuclear bombs of knowledge here. Tell us, once the contract's accepted, what happens next? Do we instantly close? Does it happen instantaneously? What steps we got?
So we're escrow state. Okay, so California is an escrow state. Some states, they use attorneys to do a lot of their digging. Being that we're so close to Mexico, in Mexico they use attorneys also, where they'll actually see what kind of liens are on the property. But yeah, title in San Diego, in California, we'll dive deeper, see all the liens on the property to make sure that those are satisfied at the close of escrow. So once escrow is open, the earnest money deposit from the buyer, from yourself, will be sent over to escrow. Make sure you're sending it actually to the right company, the right S company. Lenders are going to request fees because they have the projections of what the fees are going to be. Yet, based off of the day that it closes, based off the escrow company, those fees can vary. So they're going to request those fees from escrow. The realtor is going to help schedule the home inspection and any other inspections that are deemed necessary. Now, the home inspection and inspections are not deemed necessary, but you're buying probably one of the biggest purchases that you're going to purchase. So it's recommended that you do an inspection on the property to dissect it and see what you can live with and what you can't live with the idea that no property is perfect. We're just trying to make sure the property is perfect for you. All right. The lender is going to order the appraisal to help with the confirming of the value. So the appraiser is going to go to the property. They're going to also make sure not only the value is the same that the property is in escrow with, but they're also going to make sure the livability standards are met. Okay, so each loan type, VA, conventional, FHA, has different livability standards. So they want to make sure that those livability standards are met. If there's something called out, that can be something negotiated, just like with the request for repairs, which is done after the home inspection. And you can request the seller to take care of that stuff. They can say yes, they can say no. Based off your contingencies, you do have the ability to back out to get your earnest money deposit back. So there's things right there. And then escrow sends you a package to fill out to the buyer. And that's going to be a lot of stuff, making sure you are who you say you are, and you understand what's going on with the process. You understand basically the original offer and what the terms are of that offer for everything to kind of go forward. And yeah, off to the races.
I know that a lot of that sounds complicated. Vinny just went over a lot of steps, but it's you have professionals there to help guide you. So it's not overwhelming. So don't look at it and go, All those things Vinny just mentioned sound beyond complicated. A qualified, great, smart realtor can make that very easy. And the lender helps it be very easy as well. So don't look at it and think it's overwhelming, because it does come down to be a simpler procedure as long as you work with the right people.
I mean, one of the things that I feel can be one of the toughest things in any situation is the unknown. So when you have someone that you're working with that can walk you through the process, it's going to make your life so much easier. There's a quote that I got interviewed on a podcast the other day, and I use the analogy of the Wizard of Oz, right? So you have the great and powerful Oz, okay? And I think sometimes, I mean, realtors, lenders, people that have this kind of information, they portray themselves as the great and powerful Oz, right? Yet, if you look behind the curtain, we're all the same. We just might have more information about this right there. So, and we do this on a daily basis, so we should be a lot more educated about it. Don't be afraid to ask the questions. I mean, we're trying to get you where you need to get to. If it's buying a home, selling a home, we're trying to put a game plan together to get you there. So don't be afraid that when we're going to look down upon your question, we're not going to answer your question. We're going to build that game plan for you, if you're working with the right team, to make sure that you're educated about the process and you know what's going to happen next.
Very important. There's no dumb questions. Don't have to ask. So what to expect while the loan is going on? You know, Vinny went over a bunch of different things. He's going to be looking at your home inspection. He's going to be helping with, you know, negotiating requests for repairs, what has to be done. He's going to be looking at what repairs can be negotiated, maybe price negotiations, even further tests that may go into the effect that your professional realtor may look at you and go, hey, you know what, we need a mold test, or you know what, we do need a termite, or we need to check the plumbing, we need to have the pipes inspected. There's a lot of different inspections that cost money up front, but it saves you money in the long run, and you need to be smart about those and do them. And if your agent is the wrong choice, they're going to tell you don't need any of that, and then later on that may be a giant mistake that costs you a lot of money.
Yeah, I mean, you have the first negotiation that happens when the initial offer is received, and you have the second negotiation that happens during the process. The request for repairs, there's things that pop up, and it becomes an idea of how much we can push it, how much you want to hold back. Based off the community you're in, based off of the stuff that you're seeing when you're purchasing the property, maybe you need a foundation report, maybe you need termite, maybe you need plumbing. What you'll see in some of the older properties that have the cast iron piping, you really want to dive deeper into that property and make sure it's not corroded. That can get expensive. Just things to really look at when you're assessing the property. And the home inspection, all right, is going to be kind of a general inspection of the property. And they might see stuff that will come up and say, hey, you know what, you might want to get a specialist to really dive deeper into this one topic. So during that process, myself and David are going to kind of walk you through it and put the trusted resources in front of you to provide the best avenue to make sure you know what you're getting.
Ooh, the loan side. Okay, so I'm going to go through this kind of fast because there's a lot of steps. If you did your pre-qualification correctly, what ends up happening, the contract gets sent over, Vinny sends it over, escrow is opened. We have to get everyone's fees, disclose them to you. Then once the fees are disclosed to you and you sign acknowledging saying, hey, I realize this is the home I'm buying, this is the price, these are the possible fees, it's a 30-year fixed. That's signed. From there, we go to what's called processing. Processing is where all the documents are reviewed again that you should have submitted day one when you did the pre-qualification correctly. Processing takes a couple days, let's say around 4. Then from there, your file goes to underwriting. The underwriting is a great example of any use where it's basically like a judge and I'm like the attorney. We're both presenting a case to say your loan fits these guidelines, and the underwriter signs off on the guidelines and possibly will ask for more items, which is usually pretty standard. Those are loan conditions for the approval of your loan. Those are issued with your loan approval. We request them from you. When we get them all back, another 4 days later, so let's say that's around 8 days now, everything is finalized again. We check everything off, sign off on it, and then we issue what's called a closing disclosure. Your closing disclosure was basically put into effect in 2010, and that's a disclosure that is final numbers and fees, and it comes with it a 3-day waiting period. So when you get that closing disclosure, you sign it, you have 3 days you have to wait till you're legally allowed to sign loan documents. On the third day, you can sign the loan documents, and then depending on the lender, some lenders fund instantaneously. We are doing doc signings now, all digital, except for around 7 pieces of paper, which is unheard of. Most companies should transition to this in the future. Your brokers and other more slower moving, inefficient types will still be doing old-fashioned signings. But for the most part, companies that are more up-to-date with technology will be doing digital signings. And then you'll have a notary sign 7 pieces of paper. Once that's all done, we fund the loan. It goes down the title. It should record the same day as long as it's there before 3. Or if it gets there right around 3, it has to be recorded around 5. And that's it. Boom, you own the home.
Yeah, so the recording avenue of it, what happens is it goes to the county recorder office. It's put in like a pile, and you'll get the realtor, sometimes yourself, will get a call saying, hey, we just recorded. It could be 5 o'clock, sometimes later, where we'll get that call. But yeah, something to think about. Once it's funded, doesn't necessarily mean that it's transferred over. Now is the process different in a challenging market, understanding the price, understanding the terms, understanding the property, getting inside the property, long-term goals. And these are all things that are kind of currently happening right now. Property are still being shown. Some properties are getting 3D tours associated with them, so you don't have to leave actually the comfort of your desk to actually walk the property. For other properties, when you go inside, there's some addendums that have been incorporated into to the offers, and also just seeing the property. Also, when you go to the property, booties, a mask, gloves, at the minimum, a mask, but based off of the property, based on the situation, you want to be fully kind of protected. Just make sure you're not catching anything.
The other thing with this challenging market right now is this challenging market, it presents opportunity to you. And whenever things are super easy, it's usually because it's not much of a reward in the end. So if you take the time to look at things now when things are not the best and things are in a more interesting situation with a possible recession looming, it's more than likely you're going to get a better deal than you would have before. So as long as you looked at your long-term goals, looked at your budget, looked at your savings, looked at your job, and you're willing to go out there and go, hey, you know what, why not try and get a better deal? It's quite possible you will get it now, because the more the market gets harder and the more the economics come into play with people not working, it's quite possible you can get a better deal.
Yeah, really, really understand the situation. One of the things that I'll get sometimes is I just want a good deal. Now, a good deal, quote unquote, to yourself compared to a good deal to someone else be totally different. So let's walk through your game plan. Let's walk through your what you're looking to do and where you're looking to be at, so we can kind of figure out what is a good deal to you.
Yeah, a good deal to somebody may be like, hey, I got the house I wanted, and it was negotiated for me, all the closing costs, and it's the best. Or maybe it's, hey, I actually got this house at a 5% discount. Or, hey, I could never afford in this neighborhood before, and this house popped up, and this person wanted to sell because they want to move to Arizona because they're afraid of COVID, and I got to buy in a neighborhood I can never buy it. It depends on what your idea of a good deal is.
Yeah. Well, if you guys have any questions about this current market, feel free to reach out to myself or David. Also, follow us for our market updates. We do it every Monday and Friday at 4 o'clock. Anything else, David, you want to throw out there before we?
No, I will tell you, I think those market updates me and you do for 10 minutes is probably some of the quick and fast data that makes more sense. And it's good because you have a direct line into what's being sold, what's coming on the market, how is actual transactions really moving. So I think it's important, that 10-minute update, and then knowing what's happening in the mortgage world. Almost 95% of people will buy with a loan. So the mortgage is kind of important. So I think those 10-minute updates are huge. And then you also have a podcast, Vinnie. You never mention your podcast. You want to promote that a little bit here? Like,
Yeah. So if anyone wants to follow our podcast, it's not real estate related. It's all about mindset. It's called Road to Growth. So I interview business owners about what kind of adversity they've kind of had to go through. I mean, I've had people that have been kicked to the curb at the age of 14. I've had other people that have we're going to fall off, jump off of a building. Other people are going to jump off a bridge, and it's just kind of things change in their mind. They find out how to work themselves back up from nothing. So feel free to listen. It's called the Road to Growth podcast. And again, it's not real estate related. It's just, I mean, I know so many people out there are going through difficult times right now. Be aware that we're all going through some difficult times, some worse than others. And there is a light at the end of the tunnel.
Yeah, it's there. And we appreciate you guys watching, the support, and look for our next investor seminar. That's really interesting. It's all about generating long-term passive income and wealth from investment properties. So please look for that. That'll be next Saturday, and we'll be posting stuff about that this week as well.
Perfect. Thank you.
Thank you.